Big compliment yesterday.
Dude, that's like 2. What are you gonna do all of them?
My whole life. And somebody said that's the best breakdown about commissions and brokers.
All right, everybody, welcome back to the world of Chris and Lee. The view of mortgages through our eyes. And the underwriters, and the processors, and the loan officers, and the bankers. Everyone that's involved in the loan industry. So you guys have questions. You better have questions about how to buy a house, how to buy a second house, how to buy an investment property. What income do you need? What credit score do you need? Do I have the right amount of time being self-employed? Whatever the case may be. There are thousands and thousands of questions from a million and millions of viewers. And I need you guys to load up that chat box, okay? So wherever you're at, if you're on Instagram, ask the questions. TikTok, ask the questions. Facebook, ask the questions. YouTube, ask the questions. And you're going to get all the answers right here. You're going to love it. You're going to love it so much that eventually you will be a homeowner.
You're going to love it whether you like it or not.
Bridget, Brian in the house, looking at a home tonight. Fingers crossed. Can you talk about the current interest rates happening?
Bridget, some very good news right now. Very good news. Very good news. So, every time the interest rates go down, your payment goes down, and your purchase price goes up. Your purchase power goes up. So, about 4 days ago, if you would have asked me what the interest rate on a conventional 30-year that NAF was quoting, 6.25%. Today, 5.75. That's 50 basis points lower. 50 basis points lower. That's a lot. That's not a little bit. That's a lot. Right now, NAF, if you went to the website, is quoting 5.25 on a VA 30-year fixed, 5.25 on an FHA 30-year fixed, 5.25 on a 15-year conventional, and 5.75 on a 30-year conventional. So, what does that mean? I don't think it's just the market. I think there's a response to what's going on globally. Globally, there's a problem. What happened was Japan was lending money at negative interest rates. What's negative interest rates? Well, when you put your money in the bank in America right now, they'll give you 3%. They say, hey, thanks for letting me hold your money. Here's some money for letting me hold your money. In Japan, they were going, hey, if you want to put your money with us, we're going to charge you something. That's like negative interest rates. That's literally what happened. So a lot of the big players like Vanguard, BlackRock, Warren Buffett, Berkshire Hathaway, same guy basically, they came in and they said, hey, I can borrow money pretty damn deep here and then put it in the market here and make the difference. That's how big players are playing. Well, Japan recently readjusted and they're no longer at negative interest rates and they had margin calls. So the big players had to go, oh, shoot, I got to sell off some stock in order to make this happen. Well, that didn't have a small effect. That had a giant effect. It made our stock market collapse. Well, drop 1,000 points in a day. I don't know about collapse, but it made it drop. It made it go down a lot. And it's having ramifications through China, the UK. It's having ramifications all across the globe. Now, because all of it's coming down, the 10-year yield came down also. Because the 10-year yields came down, the mortgage rates came down. Now, what does that mean in English? What that means is, I think we're hitting a momentary spike before we back to a level. I think that's going to happen. I don't think it's going to sit this low yet. I do believe it's going to go lower long term, but I think we're in a little bit of a dip right now. And if you're thinking about getting a house, one, make sure you have somebody who actually knows what's going on. And two, you're in a prime spot right now. Like a prime. In fact, Chris asked me the other day, he's like, lock or float. 3 days ago, 4 days ago, I said, I'd float right now. And he asked me yesterday, I said, I'd lock right now. Right now, if you have less than 20 days on a contract, I'd lock all day, every day. Why? Because in any moment, we could get a notification that says, hey, we're recovering from that little hiccup and mortgage prices are back up. Now, that's not to say they're not going to go lower, because according to the Federal Reserve, they're going to take us from 5.25 all the way down to 2.5 by the end of 26, beginning of 27. That's going to happen. However, you see this giant drop in interest rates? Fed hasn't moved anything. Not 1 point, not 1/4 point. They have not moved. All of this is just market driven. And because it's market driven, it can be taken away fast. That's why I say lock.
Yeah. And here's the bonus, guys. I see a question in here that said, who's the better loan officer, Chris or Lee? Well, in my world, I say I'm the best. In his world, he says he's the best. But you know what you get? Both.
Yeah, you get both of us.
Both loan officers. So who's the best? This team.
Because
this team is the best. And
the
now
truth is, any challenge. Sorry, I didn't mean to step on you because I am best. But if we have any challenging file, I turn to this guy and I go, "What would you do in this situation?" And he gives me his honest opinion.
That's exactly what I'm hitting on. That's exactly what I'm hitting on. So I have my idea of things based on the data that I watch. He might have a different piece of data. I might have a different piece of data. So what we do is we ask each other the questions we already know the answer to likely. But sometimes he'll hit me with something and I'll go, oh yeah, that opened up this. So this is the direction we're going to be going in. So when it comes to you guys, you're our boss. All we do is say, here's the data. And then you make a decision of what you want to do with that data, whether that means buying a house, not buying a house, locking, not locking. There's so many moving pieces, but when it comes to loan officer teams, you're dealing with the best. Jonathan, how long after filing Chapter 7 to use my VA loan?
Jonathan, it could be a very, 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 very long time because we don't look at filing. We don't care about filing. All we care about is discharge date. Filing doesn't matter. You could have filed 10 years ago, but if the bankruptcy court didn't drop the gavel until today, I need 2 years from today minimum. 2 years from today minimum. There is a small exclusion in the guidelines that say if you have extenuating circumstances that we can go 1 year. What's an extenuating circumstance? A hurricane took out everything, including my job. That's an extenuating circumstance. What's not an extenuating circumstance? My wife left me. That's not an extenuating circumstance. So there's a difference, but 2 years from discharge date, not from filing date.
There you go, guys. All right. Let's see what else we got. Got a lot of questions, so let's go through a lot of these questions real quick. Okay, so Chicano Baby said 0.25 next month.
I hope so, but I think even if we drop 0.25, that's not a lot. It's not going to reflect, it's not going to do what the market did already. Because what the market did already is responding to a global situation, a market cataclysmic, not all the way cataclysmic, but it actually shook the markets across the globe. And when it started, I was like, what the heck's going on here? I had to dig in and figure out, why are we dropping so? And that's what happened. So when Fed Powell steps in and he says, hey, we're going to drop 25 basis points. That sounds cute, and it'll move a little tiny bit, but it won't move near what's happened over the last 4 or 5 days.
Six-figure travelers, fix your mirroring. All right.
Fix your mirroring.
Done. Enough, you already know what's
done.
happening.
Yeah, done.
Bridget,
Yeah.
Brian said, excellent.
Appreciate you, Bridget.
Got it, Bridget. Gloria, is it true the market is crashing now?
It depends on which market you're talking about. If you're talking about the stock market's going down pretty much. It leveled off yesterday. It was up 220 points at the end of the day. But the day before, down 1,000 points, Holy smokes. The bond market had to respond. This was like, it shook the world. And like, not just America. It started in Japan. Then from Japan, reflected in America. And then that had some reflection in China. And then all these other markets were just, they're all kind of rebalancing right now. And China's the big player. If it shakes China's market, that's a big deal. Now, if you're asking about the real estate market, they're not correlated. The only correlation they have is that you can borrow money cheaper or more expensive. It doesn't have anything to do, like most people that have a 401k, if their 401k goes down to from 100 grand to 70 grand, they're not going to lose their house. Their 401k went down. They're not correlated. The difference is that you can't borrow money cheap enough so that it creates a new market.
Deluxe Cornbread said, Chris, my man, I called you earlier.
What's up?
Deluxe Cornbread, here's what you're going to do. I don't know if I talked to you. I talked to about a half a dozen people already this morning. So do me a favor, Deluxe Cornbread. Send me a text right now with your full name. I don't know if we finish the conversation. I don't know if we need to continue it, whatever it may be, but let me know what's going on. April, who's the better LO? We already answered that one.
Yeah, we already. By the way, all of our branding says Chris and Lee, so we're kind of the same.
You get it, the whole team, guys.
Yeah.
Rajvinder, how's the rate for bank statements?
Not that great. So the primary conventional conforming loans have immediately responded. That's why I'm telling you, as I'm looking at the rates, New American Funding is putting out 5.25 on a VA 30-year fixed, 5.25 on an FHA 30-year fixed, 15-year 5.25, and a 30-year conventional 5.75. That's the lowest they've been in 3 years. That being said, the other alt QMs have not responded as quickly. So they will go in response, but they don't respond as quickly because that one is the main driver.
Yeah, Crystal Sells Homes, thank you for joining. Realtor Elizabeth, thank you for joining. Husband and wife Lozano, thank you for joining.
Appreciate you guys.
Rajvinder, thank you for the love. Joseph.
Yeah. Credit scores needed?
Oh, credit scores needed. You need credit scores?
You need
or do
credit
you need
scores?
to tell you what credit score is needed?
So Irma, here's the real simple rule of thumb. The better your credit score is, the easier you're going to get to borrow money. The lower it is, the harder it is. So technically, I don't need any. I can have the horrible credit score on a VA. I can have a 450 on a VA, technically. But in pricing, it'll hurt you. On FHA, technically, I can have 500 FICO, but you're going to need 10% or more. At 580 FHA, I can do 3.5% down, technically, but you're not going to get a great loan. Fannie Mae, Freddie Mac start at 620 FICO, but you're not going to get a great loan. That's the entry-level loan. If you want a great loan, great FICO score equals great loan. So there's your answer.
Yeah, working on a file this morning. On that note, 609 credit score, 609 middle. Not able to get it approved. Not able to get it approved. And it's because of recent updates to the credit report on the collection. So we'll take a look at all that and we'll guide you down the path. She will buy soon. Joseph, can you explain what yield spread is in mortgages?
Ooh, Joseph Craney, you're getting technical, but I'm going to go there with
and
you.
He's only going to take 30 seconds to explain it.
Damn it, I'm going to go there with
30
you.
seconds.
Okay, so the 10-year mortgage, first off, the Fed funds put out its rate. And the rate is 5.25 and 5.5. But that's not what determines the mortgage rate. The mortgage rate is based off the 10-year yield. The 10-year yield and the mortgage rate are in lockstep. So when the 10-year yield goes down, then the mortgage rate goes down. However, there's an uncertainty pad inside of there. And the pad is usually between 100 and 250 basis points, somewhere in that range. And it depends on the conjecture of the market. So, if we're uncertain, you're going to be at the higher range of the 250 basis points. And 5.25 plus 250 basis points is right around 8. But when there's certainty in the market and we believe rates are going to come down, all of a sudden that pad from 250 drops all the way down to 100. Now remember, 5.25 is what the Fed funds rate is at. Because of what's going on in the market, the 10-year yield has dropped below what the Fed funds rate is at, and the current mortgage rates are coming in at 5.25. Now that's a buy down. It's not a clean par rate, but that's what's going on. Now there's talk that the Fed's going to have an emergency meeting and maybe drop 50 basis points in order to keep everything in line. Because if one gets too out of line, then the whole thing starts to fall apart. So the Fed's like, hey, if the market's going to drop, we might as well drop too. They're kind of late to the game in that situation, and there's talk that that's going to happen right now. The odds in Vegas were 100% that they were going to cut rates in September anyway. So,
all right, user 6039. I closed yesterday with a 7.625 rate, and they dropped. There's good news for you, user 6039. You're in a great spot, fantastic spot. Yeah, rates went down a little bit, but you know what's going to skyrocket now?
Values. Your value.
Your home property value is going to go up so
You're going to see it go fast.
And then you're going to refi.
Every time we drop 100 basis points, which is 1%, every time we drop 100 basis points, 1 million borrowers come back into the market.
Yep.
100 basis points is 1 million borrowers. What does that mean? Well, in the last probably 10 days, we've dropped 100 basis points, which means 1 million new borrowers came in and the inventory did not immediately match it. Because it didn't immediately match it, we now have more buyers competing for less product. Supply and demand, this goes up.
Yeah, so user 6039, I would be smiling if I were you because you're in. You know who's not in? The rest of these millions of people who are asking us questions. So you're in a good spot. April, would it be smart to buy points with today's rates?
April, it's a very, very, very unique to you answer. And why is that? Okay, because if we know the Fed funds is going to be going down and we know the interest rates are going to be going down, that means that at some point you're going to be able to refinance with no cost. So, if in order to buy down the rate, you're going to have to pay, let's just say $5,000. And let's say you paid $5,000 and you saved $100 a month. Okay? So the math on that is pretty simple. How many months till you break even? 50 months. All right. 50 months is 4 years and change. So it would not make sense for you to refi below 50 months. So if you know that, does it make sense to buy it down today? It's like I said, it's case by case, and I really hope your LO knows what the hell they're talking about.
Yeah.
If it's us, I'll actually put it in math.
Yeah, we'll actually break it all down for you, and guess who chooses? You. Chicano bad boy. I want to see what's going to happen when the printing starts and inflation hikes.
So does you. So do I.
The world
Chicano
does.
bad boy. Everybody
The world
wants to
does.
know. I will tell you this. So somebody asked me not that long ago. They said, "Hey, listen, I heard that the interest on our debt is actually going to supersede defense spending." And I said, "Yeah, that's true." They're like, "Should we be freaking out?" And I said, "You know, from a matter of just intellectual, that's a bad thing. But from a pragmatic situation, the dollar's still the U.S. currency around the globe. So, is it a problem? We're almost 1-for-1 on GDP and national deficit. Almost 1-for-1. So, because we're there, it's not good. It's not good. But it's also not, oh my God, the sky is falling. So, when interest starts to go up, it could be a problem. But is it, oh my God, the sky is falling problem? No, it's not.
Yeah, Bob Newby, man, you got yourself a fan.
What's that?
Says, kiss the guy without a beard.
All right.
Dude, that Bob wants
Bob?
to kiss you.
I don't know about
Would
that.
it be the
man.
first time?
I don't know about that. No.
Deluxe
no.
Cornbread. If I own land, can I use VA construction loan to build land adjacent and build on first owned parcel?
So, Deluxe Cornbread, if you own the land and you're a veteran and you have VA entitlement and you have VA eligibility, those are two different things, by the way, and you're buying for your primary residence, not the adjacent land, your primary residence on the land you own, yeah, all day, every day. All day, every day. But if your entitlement is already used on another home, probably not. Almost certain no.
Ravenbrook Lynn. Set to close next week. Any pointers? Things to be prepared for.
If you locked your rate, you should. First thing you want to ask for is a locked LE. I need a locked LE. And if you have a loan officer who's on the ball, like on the ball, I want a CD. I want a CD 10 days early. If you call your loan officer and say, hey, I'd like a CD 10 days early, they'll be like, that's not the way things work. And you'll be like, just can you do it? Put it in writing. If you're going to tell me no, put it in writing. Then he's going to call his manager and go, can we do a CD 10 days early? And the manager's going to go, yeah, why? Well, because my borrower is asking for a CD 10 days early. And the manager's going to say, well, then if any of the fees change, we're going to have to redisclose a new CD. And they're going to call you and they're going to go, yeah, we can't do that because we're going to have to redisclose a new CD. And you're going to say, yeah, but that's a 24-hour turn time instead of 72-hour turn time. What? Yeah, because you've already exhausted the 72-hour turn time. And on that CD that's 10 days early, they're going to have to tighten the numbers up so you actually know what you're getting. So if you called your LO and you said, hey, I want a CD 10 days early, and they say, well, that doesn't come out till 3 days before. That's so he can save his time, or because you have an LO who doesn't know what they're talking about. Can I get a CD 10 days early? Yes, I can. And it starts the 72-hour clock. So any changes that have to be made, I don't have to restart a 72-hour clock. It's only a 24-hour clock. What? Yeah, that's true.
Yeah, and no reason they won't be able to issue a CD early if everything's dialed in.
Yeah.
So that shouldn't be a problem. But another thing I want to know about your file, Raven, is have you been conditionally approved, and have you turned in conditions, and do you have it clear to close? If it's next week, you should be that far in.
By the way, if you got a loan officer who does not know what they're doing and you come to them with it, they're going to hate me or hate you, one of the two. They can't hate you because they're making a commission. They're going to hate me because these are things that LOs don't want the customers to know.
Anonymous 101, love hard. Thank you for the love. Bob Newby said, okay, kiss. No. I'm forbidden fruit now. You kiss Lee. Diva says Lee's handsome.
Aren't you sweet?
You gotta fight
Thank
Bob
you very
for
much.
Lee. Guy on the right uses a lot of cologne, maybe. Rachel, can this be done in Nevada?
All day, every program, Fannie Mae, Freddie Mac, FHA, USDA, and VA are all available in Nevada. We close loans in Nevada. We can help you in all 50 states. We absolutely have one program, zero down program in Nevada. There are, depending on where you live in Nevada, there's different programs. So,
yeah, what city are you in?
Yes, it can be done. If you're in Las Vegas, I want to go there for the closing.
I want to go there every weekend.
Because you're a Raiders fan.
Love the Raiders. Huh. Libby, first-time home buyer, closing FHA 600 credit score, 10K down, 5K debt, and $15,000 auto loan. How much do I qualify for house?
Well, Libby, your 600 credit score hurts you a lot. Like a lot. Do we have an income there?
No income.
So, first off, Libby, some basic 101 loan knowledge. Everything's debt to income. So, you gave me a lot of debts. You didn't give me an income. So, I'll give you, let's just fill that in for you, Libby. Let's just say that you're an engineer and you make $180,000 a year. I'm going to tell you qualify for a lot of house, a lot. But the first thing I'm going to tell you is we got to get that 600 FICO up because that 600 is going to hurt you a lot. Not a little bit, a lot. And since you make 180 grand a year as an engineer, well, that's easy. We just write a check to a credit repair company and you're golden. We can get you rolling. So once you pop in, you let me know.
Yeah. I'm trying to find it, man. It's supposed to keep talking. Bridget. At what point in the process does a buyer lock in the interest rate when purchasing a home?
Bridget, that's a very good question. And that's subject to your loan officer. That's between the client and the loan officer. But the loan officer should be knowledgeable. Because if you float, that means that if the rates go down, you get a better rate. But if you float and the rates go up, you have to take the higher rate. See, the rule in the banking system is once you lock, you have to honor the lock. And the banks aren't about to not honor a lock for one customer. They don't care. It's more important to them that they honor the locks. There's a situation where a broker could withdraw a loan if it's been locked and send it to another place, but they will have to honor the locks from that main company. So the question is, when should you lock in the rate? And it's going to depend on the market. If you are with us right now and you got into contract today, I would say, let's lock right now.
Yeah.
I would say, let's lock right now. And you'd say, well, Lee, why? Could it go down? I'd say, yeah, it could go down. But let me tell you what's more likely. What's more likely is that the market's going to correct itself and it's going to respond. And when it goes up, the bond market is going to go up also. Once the bond market goes up, then the mortgage rates will go up too. Because 5.25, which New American Funding is quoting right now, is way below what it should be if the Fed drops 25 basis points. 25 basis points puts us somewhere in the sixes, low sixes, but not 5.25. So this moment right now, in my opinion, is an anomaly. And I do believe it's going to correct over the next few days, few days to a week. It's going to correct and you're going to see 5.5, which is not bad, but it's not 5.25. So you have to actually have a loan officer who knows what's going on and not someone who goes like, I have a license and I passed a test, so I am a professional.
DDL Crew, what's the interest rates today?
Good question, DDL Crew Radio. VA, 30-year fixed, 5.25. FHA, 30-year fixed, 5.25. 15-year conventional, 5.25. 30-year conventional, 5.75. Don't believe me? Go to the links at the top of our bio. Go to Cool Stuff, Today's Rates, and you'll see what I'm seeing. By the way, that is not my quote to you, and that is not an offer to lend. The only way I can give you a quote is to pull your credit, calculate your income and your assets, and then give you the quote. My NMLS is 944-254.
1066958.
And we're here for help.
All right, guys. Any of you that are interested in getting a home loan, go to the link in the bio, select apply for a home loan now, and get the process started. Or if you want to talk about it, our phone number is there.
Cool.
Sisk53. Hello, fellas. Thank you for your time.
We appreciate you, Sisk53. Best
Anonymous 101 asking the wrong question.
Best lender
Lender
for
is
the
almost
VA loan.
irrelevant.
Yeah. So
Best loan officer.
So here's the thing. Okay, VA loans. There's some companies that put a lot of money to tell you they're the best. But when they spend that lot of money, it goes into their budget and they have to take it from the client. Yeah. So I'm not talking about anybody that bought a Super Bowl commercial trying for VA loans. I'm not talking about them because that will cost them millions of dollars and they have to pay for it there. So here's the catch. VA loans are guaranteed by the VA, and then the bank lends the money. But because the VA is guaranteeing the loan, it's a simple loan. And if you have somebody that's VA direct, you're going to get good rates. You're going to get better than, you're going to get 5.25 right now, which competes with FHA. But the part that is not in the VA is an FHA has a 0.55 MI that's mandated. A VA has 0 MI, 0. So that gives you the ability to shop the rates if you know what you're doing. If you just go off the commercials, not a good idea. If you understand what's happening, yeah, we're direct lender for VA. I can beat almost everybody. I will be honest, I have trouble beating Navy Fed. So if you went to Navy Fed and you came to me with the locked LE, it would have to be on it would have to be par or downtown on the market where I can beat them. I can match them many times, but beat Navy Fed, very difficult. Everybody else in the market, I beat them. I beat them every day, all day, every day.
But from the lender side, that's a little irrelevant. You want to deal with the loan officer that actually knows how to work the loan.
Yeah.
There's a lot of loan officers out there that don't do VA loans because there's extra calculations and extra work you need to do on it, and you need to talk to a loan officer that knows it. So I know it. Do you know it?
I know, very good.
Oh, there you
There's
go.
some good loan officers too. I mean, we're not the only ones out there. There's some good ones
We're
out there.
not?
Yeah.
I beg to differ. Elite Gods, we already answered that question. JSISK53, 280K purchase price at 3% down with 12,500 salary concessions. That's great. 5.875% rate. Is that a good deal?
Okay, so maybe, but I'm gonna read into this GK53. So if you're doing 3% down, there's only 2 loan programs that do 3% down. That's Home Ready and Home Possible. Home Ready and Home Possible are good programs if you have a great FICO score. Not good. If you have a 622 FICO, I will put a Home Ready and Home Possible up against an FHA. And even though you put 3.5% down on an FHA, I will show you how it's a net better deal for you. Why? Because on a Home Ready and Home Possible, which are the only 2 that allow 3% down, you have to buy MI. MI with a 622 FICO is going to come in at 2.7%. What? Yeah, 2.7%. If I shop that same loan and I put you in an FHA, your MI will be 0.55. So the only reason that you would use 3% down is if you have an amazing FICO score, like amazing. Ask them what the quote is for MI, because if it's more than 0.55, you're probably way better off with an FHA.
I'm just gonna say it's a good deal. That rate at a 3% down with
If you
that
bought
kind
it
of
down,
salary
well,
concession.
no.
We're not
If you
talking
use-
about stop. Don't
right,
look
yeah,
behind the curtains.
Yeah.
Without looking behind the curtain,
Yeah.
that's a good deal.
If I look behind the curtains, I want to know what that 12,500 concession went to. Because if it went to buy down the rate to 5.75 and you're getting screwed with MI, you're not getting a good deal and you don't know it.
Maybe. Elite Gods, can I get a loan if I'm paying monthly on a 6K collection, or does it have to be paid off first?
Elite Gods, that's a simple answer. If you're paying it off and it's agreed to, all I do is factor it in. Even if it's to the IRS, even if it's to the county because you didn't pay child support. If it's agreed to and you're paying the payments, sometimes I need 3 to prove you've been making the last 3 payments, but it's pretty simple.
Yeah. Laninha. Earth is bigger than they say they are. Lee big?
Lie
About
big.
a space images?
All right. Okay. I kind
I
of
want more data on that.
Yeah,
What
I
does that
kind of
mean?
agree with you. Yeah, they're saying that the Earth is bigger than what they say it is. Like, yeah, Okay.
But I want to know what you're talking about. Like,
All
where are
right.
you coming from? DDL crew. So basically, that person needs to get fired. 100, 100 if they took so long to drop the rates.
Well, that's
There's
Yeah,
reason.
that's-
There's reason.
because there's. let me come to old Jay Powell's defense here. He's managing a very, very, very difficult situation because it's not just about rates. It's not just about whether or not you can afford a home. It's whether or not our money balances against China, whether our money balances against Mexico. There's a lot of factors going in. It's not just whether or not you can afford a home. So, Jay Powell is doing what he can. And yeah, it's kind of like a guy who's driving an aircraft carrier in the middle of a storm. You don't actually know what's coming, but you kind of try and go a certain direction, and sometimes the waves take you all over the place. But you're driving an aircraft carrier. You can't just turn it on a dime. So, little bit of defense to Jay Powell. Not a super fan, but I think he's adequate.
AK, I have got 509,000. I'm going to assume purchase with a 6.125% for 30 years. What do you think?
6.125 is not bad. I need to know more about the data, but 6.125 for 30 years. If you didn't buy it down and that was your par rate, probably a good deal because there's not a question. Let me tell you, AK. Here's something that you should really listen to. Pay attention. You're like, hey, maybe I'll refinance in the future. That you can take that out of your mind. Take it out because it's not going to work. You are going to refinance in the future. You are going to refinance. Let me tell you that the Fed says that right now we are 5.5% interest rates and we're going to 2.5. 5.5 to 2.5. With all the fancy math, that's 3% or 300 basis points. Okay, so if you got 6.125 today, and 2 years from now you had the opportunity to get in for 3.125, are you going to refinance? Of course you are. Of course, everybody, there's going to be a gigantic market of people calling, hey, have you refinanced? Hey, did you know rates are lower? All these commercials are going to show up. This whole market's going to create. And when they do, you're going to refinance. So there's not a question of whether you're going to refinance. You're going to refinance. The only question is, did you have to pay to get that rate? Because if you paid $30,000 to get that rate, you should have done some math because maybe that wasn't the best move. If you got it for par, probably a good deal.
Yeah, and if you got it in the last 2.5 years, you're good, man. You got that in 2020, bad news.
Yeah.
Yeah, I think you're in a good spot. Knockout 213. Did I see 15% DSCR loan?
Yes, you did. Knockout 213. And you know what? I'd really like to get you that 15% DSCR loan. I would. But let me give you some of the catch. Here's the catch. We're going to start with an 800 plus FICO score. 800 plus. That does exist, but it's a perfect scenario. It's not for everybody. Most people get in at 20 or 25%.
Yeah. Ali or Deluxe Cornbread, Knockout 213, thank you for the love. Ali Bianca Rodriguez. I signed a rate lock, but at the top of the document, loan estimate. So will my rate change?
It's not an episode. If it's locked, it's not an estimate. It's not an estimate.
Well, it's an LE still.
Yeah, when you get an LE, yeah, well, when you get locked, it's called a change of circumstance, COC. And every time we have a COC, we have to notify the borrower. And if we don't do it, it just happens in the back system. So the minute we lock the loan, you get something called a COC and change of circumstance. This was floating. It is now locked. That's the change of circumstance. You talk to your LO and you say, I need a locked LE. Locked LE. And if you're that close to closing, I want a CD. We don't do a CD till 3 days before. No, you can. You can. Just call your manager. The manager's going to go, why would they want a CD? I don't know. The customer wants it. All right, let's do it. That happens. Yeah. We've done, sometimes we'll lock a CD 2 weeks before, or we'll issue a CD 2 weeks before because it's so tight at the end. We want to make sure that this closes so this new one can close also in a chain transaction where we got one departing residence and one receiving residence. We do that.
Yeah. So here's the other thing, Ellie. This is something to pay attention to. So your loan estimate is an estimate. All the numbers may not be dialed in, and the fees that you may have already paid may be in there. But when you get your closing disclosure, it'll all be accurate and updated.
Yeah.
And if it's anything different than what you knew, you need to be talking to your loan officer.
Dude, we got 20 messages on that platform, 18 on that one, and 3 there. Dude, we're bombing. We're killing it.
You need
here.
to be in touch with your loan officer, guys. Drew, do you guys do loans in Vegas?
Drew, I think you're a loan officer. Yes, we do. We do loans in Las Vegas, in all 50 states, and Las Vegas is a city in one of those states.
Yeah. A. Rodriguezone. All LOs say they don't know what they're doing or talking about.
I don't know what that means.
I don't know.
Are they talking about us? Maybe we don't know. It could be we're guessing. I could be guessing this whole thing. You know, you never know. Could be.
Lynn's Few. I have a high DTI, mortgage score of 629, 53K salary. Should I pay down debt and save 22 down payment?
Lynn's Few, you got to contact us because I have a high DTI mortgage score. Okay, I have a high DTI. DTI depends on your purchase price because if your DTI is 45, 55 and your purchase price is 600 grand, all I got to do is drop you down to 500 grand purchase price and your DTI is going to be 40, 45. So it's a bunch of math going on. Your credit score of 629 is adequate. It will work. It's not great. So 22K down payment. 22K down payment infers that you are going after a $600,000 house or better. So there's a lot there, but we'd like to help you.
Yeah. Drew, do you offer a pre-approval? Offer, I think.
Offer
maybe
approval?
offer?
Yeah, we give you a pre-approval. Absolutely.
Raven.
We actually do a full TBD underwrite if you want. TBD underwrite means we send you through underwriting, and anything that's going to get caught, it get caught.
Ravenbrook Lynn, I hope she's
there.
good. She's the VIP of their company, LOL. And yes, we're locked in, I believe.
Well, don't believe.
Oh, VP, talk about that.
Okay.
Okay, so there's
VP.
a loan company out there where all the loan officers
Are vice
are
presidents?
called vice presidents. Okay, they're
Yeah.
all, whether
They're
they're
all
brand
vice
new
presidents, yeah.
or a seasoned
Oh
vet,
my God,
they're
yeah.
all vice
and
presidents.
they offered us a lot of money to be one of their vice presidents, and we said no. I won't out them because I don't want to get in trouble, but I will say that it rhymes
I'll
with
let Raven say it.
Home Depot.
Yeah. No.
It rhymes with Home Depot, right?
No.
Uh,
It's the Laren D. Mate.
Larendeed Mate. Yeah, Larendeed Mate. They offered us money too. So yeah, so one of the things is people like to deal with high level people and they like to call people
It's
like,
silly.
hey, I'm the vice president of this company. How many vice presidents do you have? Well, technically 6,212, but I know my stuff. Yeah. Well, when you start deceiving, it's not a good thing. It's not a good
And
thing.
another thing is that they call themselves branch managers too.
Branch manager.
I'm the branch manager, so you're
Yeah.
talking to the boss.
And when you're a brand new kid, I went through that too. I was like, give me a title. After a while, I'm like, if you don't know shit, your title collapses the minute people start questioning you. I welcome it. Come on, bring it in. It's like a gladiator in the arena in the Roman Empire. If you really know how to fight, you're not really afraid of anybody coming at you. But if you're brand new with that sword, you're like, please don't swing. Please don't swing. You might hurt me. That's the reality of it.
April wants to know, how long does it take to get a pre-approval?
April, after I have all of your documents, all of them, and know how motivated you are, I could do it same day. If you're ready to buy like right now, if you're thinking about buying in the next week or 2 or 3 or month, we probably turn time right now is probably 48 to 72 hours from when I have all of your documents. So I get this a lot. Hey Lee, I sent you everything but my 2023 1040. I haven't filed my taxes yet. Okay, did you send me your 2021? No. I don't have all your documents. We're not going anywhere. Just nowhere. So I have 2 options. One, prove you extended for 23 by giving me the document from the IRS, and then send me your 21s, and I'll calculate off of your W-2 and your 21 and 22, or file your taxes on your 23. Either way, we can't do anything until you get that to me. All of your documents.
You know what I totally forgot?
What?
It's time for a commercial.
Oh, if you need a badass loan, call a badass loan officer. You can reach your badass loan officers, Chris and Lee at New American Funding, by calling the numbers on the screen. But do not call right now because Chris's phone is on Instagram and Lee's is on TikTok, and we will not be able to answer. As soon as we're done live, give us a call, text us, and we will get right back to you.
All right. Ronald Barr. Does it make sense to buy a second home with my current home's equity?
Sometimes yes, sometimes no. It depends on whether you're a baller, Ronald, and whether you're going to rent that out, because right now the interest rates are not great, and second home mortgages are harder to get approved. You have to have a lot more in assets. So in a good market, I would need 6 months of assets. Right now I'm seeing 12 months on second homes. So if you're a baller, and you can afford both payments without blinking, it might be a good time. But you're going to refinance. You're going to have to, because it's not great rates.
Yeah. And Aguilar, how does land mortgage work? Like, is there a different loans? What's the requirements?
So, Ann Aguilar, land mortgages, we don't deal with land mortgages. The only exception is if we do an FHA one-time construct, a VA one-time construct, Fannie Mae, Freddie Mac, or USDA one-time construct. In that situation, we go out and we buy the raw land, hire the general contractor, hire a designer, hire an architect, design the house, find an after finished value, create a loan on that, and build your house for your primary residence. That's the only exception for that.
Yeah, Luda, say the Fed drops the rate in September. What do you predict the mortgage rate will drop to?
Right now, if you would have asked me that Thursday, I would have said it's probably going to drop about 15 basis points. But if you tell me that right now, I'm going to say it's going to increase 25 to 50 basis points from where it is right now, because it's down. It's an artificial dip, I believe.
Yeah, Lionel, thank you for the love. Knockout 213. We already answered that question.
Yeah, appreciate
Drew
you.
03, do you do loan pre-approval like soft credit check in Las Vegas, Nevada?
Good question, Drew. No, just no. Anybody who's saying they can do a soft credit with a loan approval, it's not real, because when I pull credit, I have to do a tri-merge. All loan officers have to do a tri-merge, which means we pull all three trade lines. And we get rid of the high, we get rid of the low, and we keep the middle. That's how it works. So let me tell you why. Let's say I pulled your credit, and on your credit, I got a 618, a 620, and a 622. All right, cool. Well, I would get rid of the 618, I would get rid of the 622, and I would keep the 620. All right? In that case, I have your 620 solid number. But let's just say I only pulled one of the bureaus, and it was 618. I would tell you you're not qualified. Why? Because I didn't do the full job. The only way you can do the full job is to pull a tri-merge.
And if you're an agent out there, you don't want that pre-approval.
Oh, no, you don't.
You're going to put it in escrow, you're going to negotiate it, you're going to lock it in, and they're not going to qualify.
You're going to be big mad.
But could we do a soft pull? Yeah. Do we want to? Should we? Probably not.
No, probably not.
J Sisk 53, close on 822.
Good for you. Congratulations.
That's around the corner.
Good for you. Congratulations.
Mama of 4 boys. Is a credit union a good choice?
It's
a choice?
It's a choice. It can be good and it cannot be good. So credit unions are this. When you go to a bank like us, we have to operate under a big system. And our system is FHA, VA, USDA, Fannie Mae, Freddie Mac, and we have these rules and guidelines that we have to follow. A credit union is a bunch of people getting together for a reason. So let's just say it's a local credit union because it's a railroad. All right, cool. Well, all the railroad people put their money in that bank. Now that bank has money, and they get to choose the rules on how they lend their money. So they have proprietary programs inside of that credit union. They can also decide, hey, we don't do FHA loans. We only do railroad loans. All right, cool. So they don't do FHA. They can choose not to do VA. However, if they do choose to do an FHA or a VA, they must follow the exact same guidelines that we follow. So, is it a good choice? I don't know. It's something that you can shop, and occasionally there's a credit union that I can't compete with because they only do this for railroad workers in this scenario. They only do it for railroad workers, and because of that, they're offering a whole different package that I don't even have available to me because it's only through that credit union. So, are they good? I belong to a couple of credit unions. One of them is Navy Fed. And I understand the concept. I also understand their underwriting guidelines are way different. So if you're going forward for a loan, I would go with a regular loan officer like us, and then also go to a credit union and go, hey, listen, I want to buy this USDA house. Well, the credit union says, sorry, we don't do USDA loans. I'm like, hey, we do. All right, cool.
Mama of 4 boys, it can also mean the difference of you getting the house and not getting the house. And let me give you some real world experiences that we've had that agents give us this feedback, okay? They say, hey, I'm working with this bank / credit union because credit unions operate like a bank. and I'm trying to get a hold of the loan officer on a weekend, and they don't pick up the phone on the weekends because guess what? They're closed. Yeah. They're not open on the weekends. But you know what, Chris? I want to work with you. You know why? Because you pick up the phone on a Sunday. You actually call the listing agent to let them know the strength of the file on a Sunday night while you're at Disneyland with your kids. So if you want to know,
sounds like a real scenario.
Has it happened? A lot. a lot. Okay. So Mama of Four Boys, it's more than just the loan itself. It's how the business operates and what can help you get that house.
Cool.
Chris Ramirez, can you tell us about your experience with grants on the loan?
So grants, they're usually not good. It's usually not a good experience because it's deceptive from the jump. I'll give you an example. There's this one program that we use, and we still use it, but I just tell everybody what it is. It's called Platinum, and Platinum says, hey, we're going to grant you 10 grand. It's a grant. And you're like, oh, that sounds great. I'm going to get 10 grand for free? Oh, yeah, it's a grant. Don't you worry about it. It's a grant. All right, cool. So then we get to the end. We're like, okay, cool. Let me price your loan. Platinum has its own pricing. So when I go to Platinum pricing, and today's 5.25 is what New American Funding is putting out, Platinum would be 6.25. And you're like, Lee, but you said the rates are 5.25. I said, yeah, that's for regular loans. You're going Platinum. Platinum has their own pricing, 6.25. And you're thinking, well, I'll be clever. I'll get into that, and I'll take that $10,000 grant, and then I'll refinance. But Platinum has it written into their guidelines. If you refinance within 3 years, you owe all that money back. Wait a minute, I have to give the grant back? Yeah, you agreed to the terms.
Yep.
So, is that a real scenario? Yeah, it's real. It's deceptive. That's the problem I have with these things because they sound amazing. They sound amazing. Don't get me started on the Dream for All program. Oh, if you want to hear a story, oh my God, ask about the Dream for All program. I'll tell you that.
Yeah, ask
tomorrow.
About it tomorrow. Yeah, no free lunch, guys. Tony Bow's in the house.
What's up, Tony Bow's?
We have 5,000 hearts, and I know why now.
Yeah,
Thank you,
Bow's.
Tony.
We dig Tony Bow's.
Tony will tell you guys, like us, heart us, share us, because it helps the algorithm, guys. It helps the algorithm. Raven Brook, we went with USDA, worked perfectly with location.
I love it when that happens. USDA loan, when it works, is great. Is great.
Yeah.
Most of the time, it doesn't. But when it works, like 20% of the time, it's 100% accurate.
User 2553, you guys are so close. We are. We're too close sometimes.
Close to it.
That's why we pop these constantly.
Close to it. Close to it.
Yeah, I know what they said.
I don't know what they.
Tony Bow said everyone tap the screen.
Tony
Give us
Bow,
those hearts,
we
guys.
appreciate you.
J-Sisk53. I do have a great FICO score. It's a 783 when LO pulled it.
That's great. Anything above 780, you're a very good candidate for Home Ready, Home Possible. Home Ready, Home Possible. That's okay. Send her away. I'm making an offer on a property, and I did call her earlier, but I'll call her back.
Jesus. Mama of Four Boys, what if your credit score is 786?
That's great. That's a great. At 780s, like 780s, that clean mark where it's like 800's a little tiny bit better, but not very much. 780 is that mark. I tell everybody 800 just because I don't want to be unrealistic. This is real. So 780 is a great mark. Absolutely.
Yeah. Anna, we already answered this question. Yep. We do not do land loans. But if you do want one, I could introduce you to someone.
Yeah.
MFaith81, are there any loans available with no down payment?
So, real simple, yes, absolutely, no question about it. VA, absolutely, no down payment, zero. All you have to do is be a veteran, serve our country, honorable discharge, zero down. USDA, go live out in the suburbs, somewhere where it's not populated, zero down. All the others require a down payment. However, there are down payment assistance programs. So, if we went with FHA, we could go FHA and then use a CalHAFA program or a SHADAP program or a Sapphire program or a Platinum program or a Shinoa program. There's a bunch of programs that we can plug on top of that so that you come in with zero down. But that's a program on top of the loans. The question is, the loans? Yes, there are loans. VA, USDA.
All right, dude, we're going to have to rapid fire.
Dude, I want rapid fire!
Dude, rapid fire means we move faster, Lee. Less words. Just answer the question.
Just meat potatoes, man. Just meat potatoes.
Zach, this is a good question.
All right,
Can you buy points down while you refinance at the same time?
Yes.
This is a good question,
Rapid fire.
I say it's a good question. You can go a little deeper.
Cool.
Why is that a good
Yes. So, when you make a monthly payment and you choose to buy down rates, it's a mathematical formula. It's not a feel. You don't feel it out. Say, I think this feels like the right move. It's a mathematical formula. So let's just say you have to buy down the rate and it costs you $5,000 and it saves you $100 a month. How long before you recoup the $5,000? 50 months. Pretty simple. So it's math. It's math. 4 years is 48 months, a little bit more than 4 years. 50 months, you'll recoup it. But if you're going to refinance prior to that, it doesn't make sense. Let's say that same $5,000 is going to save you $500 a month. Well, that's going to catch itself in 10 months. That's a really good move. So it's all math. Is it a good idea to buy down the rates? Sometimes, but not always.
There you go. Knockout, thank you for the love. Is there PMI on 15% DSCR?
No.
I checked, no.
Yeah, no. I'm trying to think if there's no. If you've got a great FICO score and you qualify, and the property has to qualify too, by the way.
So the dad babies, how do I start the process of buying a home?
Real simple. Call Chris when you're done with this. When we're done with this live, give him a call. We are going to pull your credit. If that's a stopping point, don't waste your time. Don't call us.
And anyone else that doesn't want to call, go
Yeah.
to the link in the bio and
Yeah.
select apply for a home
Because
loan now.
when I get on the phone with somebody, I'm like, hey, you want to buy a home? Oh, yeah, I was wondering. Cool. I'm going to pull your credit. Well, I didn't really want to pull credit. Let's not waste each other's time. Call me when you really want to. Other than that, you're wasting my time. I'm wasting your time. Have a great day. Call me later.
Okay, rapid fire.
All right, dude.
Abigail. Okay. Hey, you guys. Hey, you want to work for you guys?
Hey, you want to work for you guys?
You want to work for
Hey,
you?
You want to work for you?
Yes.
I think you're saying that you want to work for us. I appreciate it, Abby. I hope you do work for us.
J653 PMI for that property is 136 a month, and seller concession is AK used for closing costs and rest for painting. Okay, that's the deal up above. You asked a long time ago about
It was like 12,000
yeah.
or something like that. PMI for that property. I don't want to know the.
That's not bad.
Well, no,
136 for
it
the
depends.
it's a 280 property.
Yeah, what's the rate? What's the PMI rate? I look at 0.27 versus 0.19 versus 0.55. So
I want to know how much you're paying, and I could tell you right there that that's a good one.
136?
Yeah.
It depends.
Zach, is there any land mortgage that does buying land work for the requirements?
Is there any land mortgages? How does buying land work with the requirements? So land mortgages, no. Well, there probably are somewhere out there, but we don't deal with that. We deal with you trying to get a house, not trying to build your raw land portfolio.
Project goal. My goal is zero FICO. That's debt free.
That's not right. First off, zero FICO means that you have nothing reporting for the last 10 years. Because if you have anything reporting, it's going to show up for 10 years or longer. So your goal should mean 800 FICO. CD, good question. AK, what does CD mean? It means Chris Dominguez.
That's it, guys.
Closing disclosure. Closing disclosure is a legal document that the bank must adhere to. They must adhere to the closing disclosure. So when you ask for the CD, they can't be guessing numbers anymore. They have to go, this really is what our processing is going to be. This really is what the county tax is going to be. Everything has to be tight. And anytime there's a deviance from the CD, there's a mandatory waiting period for a new CD.
Adriana, hi. Do lenders use gross or net income to make a determination? Rapid fire.
Depends on whether you're W-2 or 1099. If you're W-2, we'll use gross. If you're 1099, we got to figure out net.
April, what documents do I need to upload?
Most important is going to be your income documents. That's going to be most important. You need all of them. You need 2 years bank statements, last 2 years taxes, social security card, driver's license, and I think that's it. But most important is income because we're going to do everything off income, and we have to pull your credit.
Apple user, can I ask for a ballpark of what I should be looking for total so I can look and see what I can make a move?
I don't know what that means.
It means, can I have an estimate, an
Of
idea,
what?
a purchase price? So you can ask it right here, Apple user.
Yeah. So, all right, if you're looking in Los Angeles, 800,000 to
No,
1.4
based on his
million.
scenario. Based on his scenario is what he's asking.
What
So
was
just
the-
ask it right here. We'll tell
All right,
you.
cool. All right.
Steph, if you're 1099, does it have to be in the same line of work for 2 years?
No, your 1099, as long as I have 2 years of 1099, the underwriter will ask questions of why you changed from one line to another line, maybe. But if it's just 1099s, like sometimes we'll get 6 1099s from a buyer because they're in a union and one day they're getting it from this guy, when they're getting it from that guy. We just put it all together and then we put an LOE to explain it all. And as long as it makes sense, the underwriter will go, okay, I understand, and then move forward.
Drew03, what scores do you pull FICO?
All of them. TransUnion, Experian, Equifax, all 3 of them. Any good loan officer has to pull all three.
KSB, I want to keep my current home as an investment. What is a responsible new home price, 400K income?
Depends on your liability. So if you keep your current home, and let's just say your current home mortgage is $3,000 a month, and you're renting it for $3,000 a month with 400K income, you could buy a $1.5 million house like that.
Fat Chicks Rock. What's up, fellas?
What's up, Fat Chicks Rock?
Loading. Is it true that credit scores are pointless if it's from credit cards?
Not true. Not at all.
Drew 03. What FICO scores you pull?
TransUnion, Experian, Equifax. We just did that.
John L. How much does an FHA streamline on a $185,000 loan, more or less?
How much does? How much does? How much does? So if you're asking what it costs on a streamline, you probably get away from $1,800 to $2,300 most banks, but there's some other things that you have to take into account. And if you don't go from bank to bank, you actually might have a gigantic closing cost because you're going to have a property impound that the new bank has to acquire, but the old bank's going to pay you back as soon as the other line gets satisfied. Satisfied.
I lost it.
Yeah, dude.
We were going Latina Power.
Latina Power.
When can you refinance to get a lower rate after purchasing?
Depends on the type of loan. If you're VA's absolute 210 days from the first payment. That's absolute. FHA is usually 6 payments. Fannie Mae, Freddie Mac, no requirement, but the loan officer is going to tell you there's a requirement because Fannie Mae, Freddie Mac will have a clawback on commissions. And they'll take your commissions back if you're a loan officer.
Carlos Escobedo, how long after CTC do you receive the loan docs?
Usually 24 hours.
This guy, that's funny. The LOL, these guys aren't the best choice. Don't waste my time, LOL. He's watching us saying, don't waste my time.
I know, right? Check that out, man.
I love our
702, this guy's in
haters.
Vegas.
Our haters are my favorite.
These guys aren't the best choice. Oh,
Don't
no,
waste my
no,
time.
I know.
I'm going to keep watching them.
Okay, cool.
Steph, thank you for the love. Roxana, how do I get a law enforcement discount?
With a gun. No, don't say that. Don't say that. No.
How can I get off this ticket?
There is no law enforcement discounts. There's a lot of people that package loans in marketing this whole thing of, hey, we have a teacher's loan. Hey, we have a police officer's loan. Hey, we've got a nurse's loan. It's marketing. It's marketing.
Don't waste my time.
Yeah. Marketing.
Jay, wanting a 800K home, does lenders need to see high income to get approved for an FHA loan?
Your 800K loan is probably going to be in trouble unless you live in LA, Miami, New York, Chicago, because 800K is going to be above the FHA loan limits. The FHA loan limits for most of the country,
In the
440s. Most of the country, 440s. If you're in Los Angeles, I can probably get up to 800K on an FHA. But in order to get an 800 FHA, you are going to need kind of a high income. You're going to need somewhere in the neighborhood of $160 to $180. That's relatively high, unless you're a doctor, which is very low.
What is up, Real Tea with Grace? How do you help with DSCR loans?
You just call us. We build your loan. DSCR. That's it.
Jumped on me again. Jen, how you doing?
Good to see you.
Would you add a buyout from spouse to mortgage balance, or pay cash if you have a buying out and refining?
Would you add a buyout from spouse to a mortgage balance? No, you can't just say, hey, I used to owe you $300,000 when we were a couple, but I'm giving my spouse $150, so now I owe you $450.
Yeah, but she's saying she's refining.
If you're refining, that's a cash out refi. So
she's saying, would you add it to the loan balance, or would you want to pay him cash? You're gonna get the money. Give him the money.
I don't. That's not a loan question. I can do the cash out refi. I can do that.
That's a good answer. Apple user, 95K debt, $600 a month, 15K for down, 815 score. Looking in Washington and Texas, I guess.
Apple user, I don't have income. 95K debt, 95,000 in
95
debt.
income, I'm assuming. Debt 600.
Oh, 95,000, 815 score. 600. That's a gold file. That if you're 95,000 in income and you have an 810 FICO, the rest of it cakewalk. You're buying, man. There's no question about you're buying, and you're probably Today's rates, you're probably cracking 450 at today's rates.
HTW. Primary residence, new a build fourplex.
Yeah, you can. No, can you do an FHA? No, one-time construct can't be fourplex, right? He got certified in one-time construct, so he's the guy I turn to for all the one-time construct
Turn to me.
technical questions.
See, you just turned.
I turn to
Chicano bad boy said, LOL, well, get out.
Well,
Waste
get
my
out! I
time.
appreciate you, Chicano bad boy. You just the raza came for him, man.
Oh, man.
Oh.
Born to surfer. All right, LOL. Lot of people will lose their jobs and foreclose millions of homes soon.
I think you're wrong, Born to Surfer. I think you're wrong, but I will entertain the argument because I'm not blind and I'm not going, hey, these guys are right. These guys are right. I look at the data and I'm like, yeah, I don't think there's going to be. I think we've already hit all of the big problems we're going to hit as far as unemployment goes, because unemployment is way higher than it's showing. It just started to show like last tick, but now you're going to see better. Everything's going to get better.
Fat Chicks Rock said block all bots, LOL.
I
think
agree
they're
with
bots?
you.
They could be bots.
Maybe bots.
All right, maybe.
Yeah.
Carlos Escobedo, how long after CTC do you receive the loan docs?
How long do you just get it?
We can get them next day. We can get our doc order after CTC and get our loan docs the next day. If we really rush, we could, if we got the
Same
CTC,
day. Oh, that's right. We've done them same day many times.
Yeah, we can get them same day if we rushed in the morning.
Yeah, so when we're at the end of closing, by the way, when you're at the end of closing, you really have to have a great listing agent because escrow's going to give you the middle finger all the time. They all say they're great, but they're problematic. And when we get to the end, the lender can have all the docs, but escrow doesn't, and escrow will hold everything up. So, many times we get CTC loan docs on the same day.
Yeah. For the rest of you that are interested in getting a home loan, go to the link in the bio, select apply for a home loan now. If you want to talk about it, our phone number is there. Sign us out, man.
Oh, dude, we appreciate all of you guys. All of you guys. We have been Chris and Lee. We are out.